Oh, you're doing a clap.
Can I do
You can do whatever you want. Do you know what that's for?
No, I don't know.
All right. So it's not just like a
I thought we were just
friendly,
getting pumped up.
friendly kind of a British
way
welcome.
in.
Yeah. Little friendly Bedford welcome. We clap and you clap for that. No. It's for the timing. So when they take all the video and the audio,
Yeah.
they use the clap to get all the sync.
So it's like the thing when directors used to,
Yeah.
drop the thing. Okay.
it's to get the sound sync.
That's fair enough.
But now I think we need to start every show with a clap.
We do. But they might not clap in return. And we're drinking some of Ben's lovely red wine.
It's delicious.
I wasn't going to drink, but you insisted. So
Cheers.
So Ben is a Bitcoiner, and I think he's a winemaker. This is Peony Lane. We bought 6 bottles from him about 2 months ago. And then they arrived in Miami as we were leaving. So
Well, first they arrived at the wrong house.
oh yeah, they went to the wrong house.
That was our fault, though.
That was our fault. And then we moved to another. That was a whole thing as well. There's a whole scam with Airbnb in Miami. I'll tell you about it later. But the wine went to the wrong house. Jeremy took it to Philly. He's brought it back, and here we are drinking Ben's wine.
Well, it has a good story then, and it's delicious.
That's a nice. I like a red wine. Mm-hmm. Anyway, welcome, Austin.
Thank you very much for having me.
Thank you for coming on the podcast. For context, we've just been to Pacific Bitcoin Day 1. Mm-hmm. I think they did a great job.
Fantastic job.
Great conference. And we wanted to fit, well, Danny wanted to fit in talking to you so much. We've come back and we're going to go. So listen, don't always do this, but sometimes it's good to give a background to the people listening. If they don't know you, Austin, tell them who you are, where you're from, and all this energy shit we're going to talk about.
That sounds good. Yeah, thanks for the chance to talk about the background, because I think it really kind of shapes sort of my own Bitcoin story and why I think that Bitcoin and Lightning Network can really revolutionize the energy industry. So I have been in energy really from kind of the day one. I was an engineering student doing research on energy efficiency, and sort of for me, that's what kind of created the attachment where I started to really learn about how energy affects people's lives.
What do you mean you were studying energy efficiency? Like,
oh yeah, so what was really neat was actually you're taking energy use, across a cross section of a community, how much natural gas people used, how much electricity they used, and you're running models on that data to try to figure out, where there were opportunities for people to save money by saving energy. And once you identify those opportunities, you'd go into the homes and meet with people to then say, hey, it has to do with your furnace is really out of date. Here are some programs to help, you get a new furnace. So things like that. So it was really sort of on the ground in the community kind of research. And so for me, that's when engineering or energy sort of came out of the engineering textbook and now became something real, something very tangible. Because obviously you can't touch electrons, or you don't want to touch electrons, but now I sort of understood energy in a new way. And that for me was what catapulted me into grad school, where I spent, really 5 years studying natural gas development, kind of soup to nuts, everything related to hydraulic fracturing or shale, and understanding both environmental policy as well as the economics of it. And through the whole process, really just getting a better sense of the natural gas industry itself.
okay, let's go a bit broad and then we'll come in, because I want to ask some questions about fracking.
Yeah.
It's something that's like a political hot potato in the UK. I know it isn't, there's kind of like mixed feelings on fracking here. I've just been listening, there's an interview at the moment that Joe Rogan's done with Bjorn, what's his name? Bjorn something or other, where they're talking about fracking with that, and they're talking about and discussing kind of like the net impact of fracking, in that it may reduce the cost of being able to produce natural gas, and natural gas itself has less an environmental impact on coal, but then they talk about the environmental damage of the fracking process. So I've got questions about that. But generally speaking, you're now a Bitcoiner. Mm-hmm. There are so many discussions around energy. I mean, God, 2 years ago, we barely talked about energy.
Yeah.
Now it could be like, 20% of the shows we make?
It's a lot. I think the first time we probably came up was with Troy. I don't think before that we'd really done much on energy at all.
No, not to this level. And now we've done so many shows on energy, how the energy sector works. We've discussed nuclear, OTEC.
Yeah.
Yeah. And there's like some pretty hardcore debates. There are people who think climate change is like natural. Climate change is caused by humans. It's something we don't have to worry about. It's something we should worry about. Like, there are so many discussions and debates around it. as you as a Bitcoiner coming in, what are you thinking about with regards to energy? What are the main things that are on your mind?
So I think I'll break it into two things. I think number one is uncertainty. I think that anybody who sort of sits here in this moment in time and thinks that they can predict the future is forgetting how throughout time energy has always been up and down, left and right. There is a ton of uncertainty to think about. So whether we're talking about what is going to be the future state of the climate, or we're talking about what are energy markets and resources going to do in the future, there's just a lot we don't know. And so I always just try to caution people to stay open-minded around what the future can look like. Think about the actions today that'll help, set us on a good direction, but don't be so dogmatic that thinking that the answers today. So I think that's thing number one. And then the other sort of side of that is then really just a belief in free markets. And when I say free markets, it doesn't mean sort of unconstrained free markets. It means markets that are transparent, markets that provide accurate price signals and represent sort of the true cost of energy. And so in order to make that future, I think, the best, and to sort of, deal with some of those uncertainties, I feel comfortable when people really lean into what can the free market do to solve some of the problems. And so when I think about energy, those are kind of my two themes: is keep open-minded, strive for free markets, because they're going to find the answer.
And what parts of the market aren't free right now? Again, I've heard criticism of, say, the renewable sector, where people say, well, the renewable sector has only been successful and growing because of massive subsidies that have come from the state. But then I've also been aware that there are massive subsidies for the oil and gas industry as well. So what parts of the market are actually like free? Like, where is the real free market?
Oh, geez. Well, I think Bitcoin mining, that's one of the things that actually really attracted to me is they were sort of creating their own market, by actually going. My entire career had been, what you're trying to do is basically bring energy to people, bring energy to businesses. And I saw Bitcoin miners were moving to the source of energy. So they were sort of creating their own market off grid. And so I think that's a perfect example of, here is a source of energy demand that is looking for a price signal. They're looking to really identify the true cost of that energy. And in doing so, they're finding the cheapest energy. So I think that's a great example.
Right. But that is still within a current energy market and energy mix that's being created. Like, when you look at the broader energy market itself, and especially something I have to think about a lot being in the UK at the moment, we have very, very high energy prices. It's unbelievable what's happening. Like, businesses are closing down, people cannot heat their homes. So when I'm asking you with regards to the market, you say that part of the market is a free market, but like, how do you get a true free market for energy? And can you have a true free market for energy? And if you did, how would the market change?
Got it. Yeah. So what I would say, when you think about the free market, I think in energy, what is important for folks to realize, and again, I'll go back to Bitcoin miners without diving into that, it's that the cost of energy is going to change both in space, so geographically, and in time. And so when you're trying to craft a free market in energy, what that means is you have to get more granular. You have to as well think about the cost of energy in specific areas and at specific times of the day. And so when you have the ability to realize the cost in a more granular way, that's when you can get closer to a free market. But that's only kind of one piece of the puzzle, because one of the things people talk a lot about nuclear. So there's sort of a lot of, I think, enthusiasm for nuclear as, here's this base load power, it's clean, et cetera. But there's huge subsidies that are provided to the nuclear industry that people aren't even really aware of. One of the ones that I like to talk about, just because I think it highlights, this is why this picture is always complex, is there's something called the Price-Anderson Act in the US. And what that means is that any liability for a nuclear accident above a certain amount, which is actually a pretty low amount, the federal government's going to pick up the tab for that. And why that's a huge subsidy is because no private company, so a lot of the utilities in the United States, a lot of the power that's delivered to homes and gas is going to be by investor-owned utilities. And those investor-owned utilities, they trade on the stock exchange. They wouldn't have nobody would want to buy their stock if they had the liability of a nuclear accident on, potential in their balance sheet, because that's basically an existential type event.
And you probably can't get insurance for
and
it?
you couldn't get insurance. So they can insure everything but a nuclear plant. And so that's sort of just one example of sort of a very esoteric, lesser known subsidy, but it's there.
But is it a subsidy? I mean, I guess it's a subsidy, but it's also an insurance. The government.
Yeah, but the government doesn't charge the companies for that insurance. They just say, hey, if you ever, as long as you follow our rules, if you ever have an accident, we'll take over the liability.
Would you say that's something similar to the FDIC?
I mean, I think it's along those same lines where the government's basically providing here's a top-down thing that basically we're taking on the risk. We're helping manage that. We're taking it off the hands of the industry.
Why do they provide that? Is it purely economic, or is it more to do with giving kind of reassurance to the market, or speed of response, or just, if there was some kind of nuclear accident, you just don't want to wait for the private sector to deal with it? What is?
Well, any private company just wouldn't have the balance sheet to deal with the liabilities that result. So it was a recognition that in order to support the nuclear industry's growth, somebody had to take that liability. Otherwise, there would be no private investment in that. So you can get now private investment in building nuclear plants, but you can only get that if they're not on the hook for any accidents.
So if there was a true free market, there probably wouldn't be any nuclear power.
Yeah, that's exactly right.
What would we have?
Well, you could think about it in maybe smaller scales. So one of the really interesting technologies is modular, small modular nuclear reactors.
These version 4, do they call them version 4 reactors?
SMRs, I think they call them.
Yeah, SMRs. Those things obviously would sort of have naturally sort of limit the potential impacts of a nuclear accident. And obviously we're talking about something that's super rare, but or super unlikely, I would say. But at the end of the day, it's just one example of the government, through policy has major effects on markets. And so, of course, the easy examples are the incentives provided for renewable energy. But then there's also sort of the flip side of the equation. So when you think about, and this is the complaint that folks who are advocates for renewable energy will have is, well, we're not sort of pricing in the externalities of fossil fuels. And so when I say externality, what I'm talking about, carbon, other types of emissions, environmental damage, those things maybe aren't being reflected in the price of the energy that's being delivered to the market. And so folks would advocate for, okay, let's have a carbon tax. That's a way, or let's price that carbon. That's a way to correct the market. So you can have issues of subsidization or issues of externalities not being priced in. But those are two sides, or two different sides of the coin, but they both sort of distort what is the cost of energy that's viewed in the market.
And you're still never going to have a truly free market whilst you have a state. Because the state's always going to interfere in one way or another. And then even if you did, is it still truly a free market when there is a historical subsidies and coverage given by the government that's actually allowed for certain parts of the energy sector to advance?
Yeah, so I'm certainly not going to, when I say free markets, it's sort of an idealistic thing. It's more like the pursuit of,
it's like,
as opposed to it can be achieved. I really think that we should, whenever we have a choice, our bias should be towards more freedom and more transparency.
Okay, tell me a bit about fracking, obviously, because you know about that. As I said, when the show I was listening to with Rogan and Bjorn, whatever his name was, they were talking about kind of that natural gas is preferred because it has a lower impact on the environment than, say, burning coal.
Mm-hmm.
But there is pollution that comes to, say, the riverways and the waterways that comes out of fracking, and there's certain environmental damage that comes from it. So, like, what is the true story and the true picture of natural gas coming from fracking?
Yeah, so I think of any time you're extracting a natural resource from the earth, there's going to be impacts. And so you can think about just the fact that in a lot of cases, what we're doing is we're laying pipelines to remote areas. We're chopping down trees. We're leveling off a part of the earth to then, drill wells into the ground. One of the most interesting things about fracking, though, has been how that footprint has really been minimized. And how it's been minimized is that on a single well pad, it used to be just one well pad meant one well, and then they would have to then do another one. And so you can look on Google Earth and you can see parts of the US where it was sort of that one-to-one relationship. And it's like, it's amazing what it's done to the landscape, where you have such a disruption to just sort of, you just see well pads everywhere. But with fracking, what they've been able to do is drill horizontal wells. And the most interesting thing is, so they can drill 12 wells, sometimes even more, from one location, and they go out and they spiderweb thousands of feet into the formation to get the natural gas. So you've taken a footprint and you've shrunk it down, by a factor of 15. So those are some of the really interesting things that have evolved with hydraulic fracturing, with horizontal drilling, that are truly remarkable feats of technology. I mean, to imagine that a drill bit going 10,000 feet down and then 15,000 feet sideways, it's incredible technology, and they're steering it the whole way. I mean, it's very precise. It's pretty cool.
But how's this natural gas stored? Is it stored as like tiny little bubbles within the rock?
It is in the micro pores of the rock, absolutely. And so the fracking process is injecting a hydraulic fracturing fluid, into the rock at high pressure, and then having sand or something similar, basically hold open those little pore spaces, so that way the natural gas can flow out over time.
Wow, incredible. All right, so let's move on to, is it pronounced Synota?
Yeah.
Yeah, so Synota is the company you founded.
That's right.
And you come under high recommendation from Jeff Booth. And when Jeff Booth gets in touch and says, Pete, you need to take a look at something, like, I'm all ears. Okay, I
Wonderful.
love Jeff. So tell us about Synota.
Okay, so Synota, basically, we exist to create an energy abundant future. And how we're getting there is actually solving the problems that we've been talking about around markets. And it's basically providing the energy industry the opportunity to decentralize the settlement process. And so when I say settlements, what I'm really talking about is the financial part of every energy transaction. So when you and me consume energy in our home, there's two parts to this transaction. One is I have energy delivered to me. The second part of that transaction is I actually pay for the energy. Now, what happens today is that the means for paying for energy are really kind of stuck in the days of the 50s and 60s, when energy companies used to be vertically integrated. So when people used to walk neighborhoods, read the meters, go back to the office, put the information into the billing system, you get the bill, 30 days later, you're paying that bill. That's hardly changed in 50 years. We're still largely doing that. So we're paying for something that we've consumed 1 month ago, 2 months ago. So what we exist to do is to really cut all of that out. And so we're creating a programmatic link between the energy system itself and the Lightning Network. So you can imagine, the visual I like to paint is, if you go into the control room of any utility, what you're going to see is all the physical nodes of the energy system sort of on the big board. You're going to have the points of energy production, the points of consumption, and all of the sort of nodes, the substations, et cetera, in between. They're all represented there. So now imagine the Lightning Network being very similar to the energy system itself and how it moves money, where every physical node now has its own node in the Lightning Network. And when energy moves in one direction, money moves in the other. So you're basically, what we're creating is a system where money can move as fast as energy. So no longer do we have to wait on the bill to come or anything like that. Now we can have really this full dynamic system that's perfectly linked together.
Right, you're going to have to break that down a bit more.
Yeah.
Okay. So talk to me as like a real world use case. Yeah. We're in my house now. Say this is not my house, but say this is my house now. I've got a meter up on the wall. I can turn my electricity or my gas on as and when I need it. I can put my cooker on, start cooking some beans for my beans on toast.
That's
or
right.
I can boil a kettle, or I can have like the TV on. How does this work? Because at the moment, what happens is, like you say, I get a bill. By the way, I didn't even know that's a month or 2 months later. But that works quite well for me.
Yeah.
Our bills have fairly, up until recently, been fairly stable, not too volatile. It's changed a bit recently. But generally speaking, that works. Like, what part of that needs fixing?
Yeah, so what's happening is, because you're paying for something you've already consumed, you're basically getting a loan every month.
Yeah.
And there's no such thing as a free loan.
Okay.
So what's embedded in the cost of your energy bill is all of the financial inefficiency that is associated with the fact that you're not paying in line with your consumption.
Actually, do you know what they always do as well? They always overcharge. I always have a credit with my energy company. I don't know if that's a British.
It was definitely the same in England. I don't know. I don't think that happens in Australia.
Yeah. So whatever they think you need, Emma's probably the same. Like, you have like this extra credit, and it grows every single month. So by the time at the end of the year, when your contract's ending, you want to change, I might have like a £300-400 credit with this energy company. I found out one of the reasons they do that actually is because you got a credit. It's like this. It's a signal to you that, I should stay with them. I'm earning money. Now, really, what it is they've always just been overcharging you. But that's generally how it works. like I said, I've been okay with that.
Yeah.
What are the inefficiencies then?
Yeah. So the first inefficiency, so cash flow is a thing. So if you're consuming something, that means the company that provided to you had to pay the money to bring that to you, but you're not paying them for a few months later. So you have this disconnect, which creates cash flow issues. The other thing, it has to do with the credit exposure side of it. So you individually, you're not a big credit risk, but when you multiply that by everybody that's consuming energy, by big companies that consume energy, now if you're the energy supplier, you're wondering, okay, is Peter going to pay this bill? Or if you're a big manufacturer, are they going to go out of business before they pay their bill? So now you start to sort of stack up, okay, we've got cash issues that we have to manage. To manage those cash issues by actually borrowing money from, commercial paper markets, by drawing upon the revolving line of credit. So you start to think about, okay, there's whole departments now that are tasked with managing cash flow. There's departments now managing credit risk.
Right.
And so that's the financial inefficiency that exists.
The cost of the capital
The cost of the capital, absolutely.
which gets passed on to the customer. Do we know what that is about?
Yeah. So what we think is that we can save about 10% on average. So your bill could be 10% cheaper if you adopt, the software that Synota is using, if you pay for energy instantly. Now, the other things that are important is so it's called bad debt, but actually in the US, 5 to 7% of people don't pay their energy bill.
Yeah.
And that just continues to stack up over time, again, because the energy company doesn't know if you're going to be paying that.
I think there's some kind of laws with regards to turning your energy off in the UK as well.
Same thing here.
Yeah.
But there's ways to intervene and help resolve those situations quicker when you actually know. But when you're relying on a non-instantaneous way of paying, it delays that information of when you're actually going to know that.
Right.
So again, it just sort of exacerbates the problem.
Right.
And then the last thing that I'll mention is that it's also the case that when you pay your energy bill, you're just paying one company. But in my experience, I've worked through the whole value chain of energy. So there may actually be 5 or 10 companies that had a hand in bringing that energy to your house, but you're only paying one of them.
Right.
So what do? They have to turn and pay the next one, who then pays the next one and the next one.
You're paying whoever you buy the energy from.
Yes.
The energy, but okay.
But then they turn and pay the other people.
Because they don't want to have they don't want every gas company to lay a set of pipes. They want one shared set
exactly
of pipes.
right.
Yeah. Okay. So technology wise, the way it works is essentially like I'm basically streaming sats for my energy usage.
Yeah. So that's possible. Yes.
Okay.
But what we think is actually going to be the case is that it's more important just to give people a choice. So if you want to stream sats, great. If you want to still pay at the end of 30 days, great. But what we can do is we can just get closer to the cost of providing the energy, because again, if you are deciding that you want to wait for 30 days, there is cost associated with that. And so now we can differentiate the consumers.
Can see the two.
Yes.
All right. So it's a bit like when I think the airlines were one of the ones who first revolutionized pricing mechanisms.
Mm-hmm.
So it was kind of like, I know if I book weeks in advance, I can probably get a cheaper flight. But if I do fly on the day, or if I want to fly in the morning, it'll be this. If I want to take hang luggage versus, they give you those options.
Mm-hmm.
And so if you want to catch a flight these days, if you're like a little bit shrewd, you can go, right, I'm going to book in advance. I'm only going to take hand luggage. I'm going to take the morning.
That's right.
You can plan all this shit.
That's exactly right.
And so what you're basically saying is, here are your options. You can pay at the end of the month and it will be £300, or you can pay as you go and it'll be £250.
That's exactly right.
And the energy company benefits because they're getting the instant money.
Yep.
Or you're incurring the cost of capital if you choose to defer it.
That's exactly right.
Okay. Is this one of those things where it will be probably discriminatory against, not by intention, but discriminatory against the poor?
No.
Okay.
No. So, in my Twitter bio,
You sure it's not like because we know these things happen. Like, for example, with insurance, poor people tend to have to pay proportionally higher insurance rates because they tend to live in areas of higher crime. Mm-hmm. And there's like a term for it. I can't remember what it is, but
yeah. So no. So that is not the case. Actually, it's going to be the opposite way. And why that is because so much about energy costs or price today that we all pay is being socialized. And so when you think about that socialization, what's happening is that there's maybe neighborhoods, maybe zip codes that are more expensive to serve, but everybody's paying the same price. One of the examples, actually, I was just reading the Canary Media on the way over, which is an energy publication. And they were talking about solar panel deployment and how there's a huge gap between, wealthy people with solar panels and low income people with solar panels. Now, part of that can be just sort of, ability, cash on hand, able to sort of pay for those things. But it's also the case that, again, we lack sort of the price signals to say, does it make sense to be sort of filling up wealthy neighborhoods with solar panels versus should they be more distributed based on the actual needs of the grid? And so there was a study in Chicago recently, not recently, 5 years ago, that sort of looked exactly at that issue where the incentives which were available to everybody were only being taken by people in wealthier neighborhoods. And to the extent that it was actually creating a burden on the entire energy grid, well, the burden, which then gets represented in costs to more maintenance, upgrades to the grid, that burden gets spread to everybody. So the lower income people are actually helping to now subsidize more wealthy people having solar panels on their roofs. So there's actually embedded equity issues that are not being resolved, that can be solved with better market pricing, or better markets. And then you can actually more directly address some of the problems that do exist with energy equity if you do want to have programs like energy assistance programs, which are really widespread in the US. One of the challenges actually with that, so during the pandemic, lots of additional energy assistance was provided. But a significant chunk of that went unused. Well, why? I mean, this is money available to help people pay for their energy bills. Why are people not taking advantage of that? And the reason why is because of fraud. So the government didn't want to give money directly to the utilities because money's fungible and who knows where that's going to go. Okay, so they didn't give it to the utilities. What they do is they say, okay, if you need energy assistance, get your form of identification, your bill, and then 2 things that prove you live there. Go down to the nearest office and then you'll get the assistance. Well, that's a lot of time and effort. So with the system that we're talking about, where it's sort of provable where the money's going, it's going to pay for energy, we can now have a way to efficiently distribute those benefits to the people that need it and be able to say with 100% confidence that benefit's going to pay for energy. So just another example of how you now empower governments, empower energy companies to better serve the people that they serve. Not sort of take this top-down view where everybody pays the same, everything gets socialized. Let's actually get very granular with things now that we can when we decentralize. Our whole thing is the energy system itself is becoming more decentralized. Let's now decentralize the method of payment.
And what about, I understand why you're going to use the Lightning Network for this. It makes sense. You can stream sats as you stream energy. But what about the inherent volatility of the Bitcoin price? How do you prevent that becoming an issue? Is this similar to like how Jack talks about the Lightning Network?
Precisely.
Yeah. So you're just using the Lightning Network as a way of moving value fast.
Yep.
But you're not using it in terms of, it's not the payment currency.
Yeah, so they said don't give you quick answers, but that really is the quick
Yeah,
answer.
well, that'd mean my assumptions. Otherwise, it just wouldn't make sense. Like, if you're in the UK, if you had this great technology, there'd probably be like one person in the town I live in beyond me who you could explain to. Nobody else would. Yet you still got a problem. Like, you've still been able to solve a problem for everyone.
Yeah, so it really is. It's thinking about
You're using the power of the Lightning Network.
The Lightning Network for us provides sort of an atomic medium of exchange, or sort of instant medium of exchange. So you can operate in your local currency on both ends. The payer and the payee can both deal in fiat, deal in local currency, or deal in Bitcoin. But the point is that really Bitcoin is the vehicle to move value quickly. And so that's really what we're leveraging here. And then on top of that, the Lightning Network is an open network. So that's where we're able to actually write, in that application layer, write software that's creating that direct link. So the whole back office that today sucks time, sucks resources, from the system, we can now eliminate all of that and just focus on when energy moves, money moves. It's that simple.
Right. Okay. So where are you at with this? Are you at the point where you're deploying this or you're just testing it? Where are you at with this?
Yeah, that's a good question. So where we're at today is we're working with a couple of Bitcoin miners to commercialize the software. So we just raised money and that's really where we're at. So what we're doing is going to be pushing sort of the limits of the Lightning Network. And so that's why we get really excited. So we're working with Bitcoin miners who understand the opportunity to really initiate this innovation because this is a huge way to scale the Lightning Network. So let's start with people who know it best. Because of everything you said with Jack, et cetera. the energy companies, they're not looking to have Bitcoin in their balance sheet. So we're able to make sure that they still receive cash, or USD in our case. And really the only case that we're asking them, from a sales point is, are you okay getting paid more frequently? So it's an okay sort of pitch to them. And that's where we're beginning. And what we're going to do is really just kind of scale within the Lightning Network to kind of build out, okay, we're doing $1,000 a day. Now let's do 10,000, let's do 20. Those are the things that we need to do and do it at a very high reliability, because Lightning Network reliability is not 99.99 like a Visa or MasterCard. So we're having to sort of put the effort in to make sure we can get there, because we're not paying for podcasts. We're paying for energy. It's a critical thing. It has to be 100% reliable.
Right. Okay.
In what way are you testing the limits of the Lightning Network in terms of like volume of transactions?
Yeah. So it's transaction volume, and it's also just ensuring that the reliability side of it.
Yeah.
So
right.
what we're trying, there's novel infrastructure that we're building on the Lightning Network, and I think that's really kind of the biggest thing that we want to show can scale. So liquidity is, of course, one of those challenges on the Lightning Network, and making sure that you actually can move the payments. And how do you manage all of the liquidity without, creating a bunch of cost? So it's about sort of doing everything, doing it quickly, and not sort of losing your shirt in the process.
Okay, so if you're using the Lightning Network really as a way of, it's kind of like an accounting system that runs alongside the distribution of energy, and it's just a way of moving value. But does that not mean you have to hold a certain amount of Bitcoin yourselves to be able to move those Satoshis around? And are you taking on board any volatility risk?
Yeah. So
how are you hedging your risk?
Yeah. So the short answer is yes. What we're doing is we're setting things up so that we're not sort of owning that risk ourselves. But I think that that's going to be an important question and challenge with anybody that's doing something like what we're doing on the Lightning Network, is how are we as the enablers of these transactions going to be making sure that we're not now putting ourselves in a position or putting our customers in a position where they're exposed to the price risk. The good thing is the transaction that we're talking about today happens in under 10 seconds. So there's really not currency risk in that. Now, but as we scale and we're maintaining liquidity, it's going to be a question for us of what's the most efficient way to do that while also managing the price exposure.
Oh, yeah, but hold on a second. So if you're going to be taking payments from the miner and you're going to be sending, I assume with a cut, some of those payments across to the energy provider, and you're saying, do you mind getting paid instantly? What are they actually getting transferred? Like, you're streaming sats because you can do instant sats, but the energy company at the other end, if they only want dollars, how does that become dollars for them? How are you settling? Are you settling on a daily basis, a weekly basis, a minute by minute basis?
Yeah, so we're integrated with a third party on the off ramp side.
Okay.
So the actual exchange is being done by a third party today.
Right.
Because effectively we're actually not serving as an intermediary in the transaction. It is purely as Lightning should be. It's peer to peer. Our software really exists as just decentralized software that allows both parties to transact between each other. So it's to automate all of the complexity. So we're not actually the ones who are pressing go and then moving the funds over. We're just saying, here's software that has all the logic embedded in it. It will automatically read the meter and then move the money. And then of course, a third party, which is obviously custodial, does that conversion at the very end, just like Jack would say. Yeah. So we're not involved in that. We're just using somebody's existing technology.
Is it not like an accounting nightmare for the energy company, the energy provider? Because instead of getting like one payment every 30 days, they're getting 1,000 throughout the month or whatever it is.
Yeah, so that's a great question. So one of the fun things that we talk about with energy companies is reconciliation. So today reconciliation is actually, it's task in and of itself, because you are getting multiple, you have multiple sources of money coming in, and what ultimately is happening is that there's folks whose job title is in the accounting department, focused on matching up inbound, outbound, ARAP. All of that can get pretty complex. But when you have the Lightning Network and you're settling things instantly, the actual notion of reconciliation goes away.
Right.
Because it was money out, money in, or energy out, money in, and it all happens in 10 seconds.
Yeah.
So it's actually kind of fun having these conversations with energy companies, with their controllers, et cetera, saying, hey, it's going to change how you sort of perceive things. So multiple payments is not going to be a task, because A, it's all fully automated, B, you don't actually have to reconcile anymore.
So what is the response so far from energy companies been? And are you purposely targeting ones, say, in Texas who are already aware of the Bitcoin mining thing, or are you going to companies who've got no idea and they think you're fucking crazy?
So the response from energy company has been, okay, yeah, this is solving a big problem, but not loving Bitcoin.
Okay.
And so that's where we're actually, it's really funny. So we just talked with had a meeting with one of the largest energy marketing companies. Marketing in terms of like, marketing could mean a couple of things in the space, but truly like marketing and promotional, type of things. And they said, hey, everything that you're doing is fantastic.
Yeah.
The value proposition is very clear. Can you do it without saying Bitcoin? And so the short answer is yes.
I love that though. Without saying it, it's like, that's just a bad word. Just don't say it. We can do this.
You don't need that to sell it.
Yeah, you don't
And so
need that.
I'm like, okay, I get where they're coming from, because it's like you're solving the problems. Just focus on solving the problems.
You could just say blockchain.
There you go. Maybe that would warm them up. I have no idea.
But it works, doesn't it? I suddenly use changing from Bitcoin to blockchain. They're like, oh yeah, blockchain.
You'll be inundated with investments then.
Yeah.
It's been fun because I'm such a passionate person in Bitcoin, so I love talking about it and how Bitcoin like networks solve these problems.
Yeah.
But so it's interesting when people who know how to communicate in the energy industry, they're just like, we don't need to talk about Bitcoin in order to sell this, and so I'm catching up.
So with the tests that you've got coming up, what is it you're looking for? What are like the knowns you're looking for? And what is like the field of unknowns that you're thinking about? Like the unintended consequences of this.
Oh, geez. I think it's really just proving out how we're actually going to be managing all of the flows and ensuring that, things like you talk about, are you taking on price risk?
Yeah.
I think it's just really doing that and scaling up. It's the reliability and it's the volume of the payment. But other than that, no, it feels all very known. So we feel very good about where we are.
But do you think this will change any part of like energy production?
Oh, I think that's why we get really excited about this, is because when you can now, so what's key about this whole thing is it's the payment side is one aspect, but what we're doing is we're decentralizing the whole processing side. So no longer do energy companies need to centralize everybody's meter data onto one database. Now it's all happening in a decentralized way. So you have your own container of data. I have my own container of data. We each own our respective data. And so people get very excited about that, because that is what will allow us, you and me, to have different prices, because we're not sort of forcing the same processing. We're not making changes to one centralized system that then we have to push to everybody. Now we can start to be our own unique operators, and we can get very granular in the pricing. So when you think about the production, now we can give clear signals to solar plants. Now we can, help nuclear plants get, the true value of what they're providing every day. So it's everybody in the value chain is now going to be much closer to the value that they provide.
So how big could this be?
Oh, it's huge. It's the whole energy economy is going to move on to Lightning. And that's what we're really excited about. So when I say the energy economy, I'm talking about, it starts with the $4.5 trillion every year that's spent on energy.
Huh?
Yeah.
Hold on. The whole energy sector will move on to Lightning.
Yeah. So that picture I painted of, hey, every node in the physical system will now have its own Lightning Network node. And our software just makes it so that way those Lightning nodes now can talk energy. That's really it. And so they now just are in constant communication with each other, moving funds instantly between each other. So it is that circular economy now happening for the energy industry. And what also gets me excited, Peter, is that it goes beyond that, because then you think of all of the other energy-related products and services. So, one of the common things in the States is, okay, well, you can also buy insurance tied to your energy. Okay, well, throw that on there too. Or maybe if you're somebody who, your job was you put the solar panels up, so you are the installer. Now you maybe can have a choice in the future of, do I want to make a small amount off of the future revenue of that solar farm, or do I want that upfront payment? So now you can start to think of different means of compensating people who have a role in providing the energy in that value chain.
I think a really interesting thing that we've not got into at all yet is the stuff you're doing in like terms of the mini grids and emerging
Yeah.
markets. I'd really like you to get into
This
that.
is what Danny was telling me about earlier.
Yeah. So this is super interesting, and I have to give credit here to two people. So one is Kevin Hallinan, who is professor at the University of Dayton, and the other is Dan Snitzer, who is my friend.
Snitcher.
I say is Schnitzer. He's an awesome guy. So a really good, a dear friend of mine from grad school, and he's the CEO of a company called SparkMeter. SparkMeter is on the ground in 26 countries today with hardware and software and mini grids, and they do a bunch of other things too. But that's where they really kind of got their start. And so in conversations with both of them, one of the most interesting things that I learned was mini grids during the first few years. So when I say mini grid, I'm talking about we're in remote Africa or any emerging market, and you're basically, here's now a solar panel providing power to a community. But of course, right when those panels get installed, the community doesn't have a lot of organic load that they're ready to plug in. There was no electricity before, so it's not like everybody's lining up to now
using that NutriBullet.
Yeah, exactly. So what do you do? I mean, so one thing people don't fully appreciate is that in parts of Africa or throughout most of the continent, the average price of electricity is 30 to 50 cents a kilowatt hour.
What?
Yeah, so way above what we're all paying.
Yeah.
So talk about energy equity. There's an issue right there. And there's still 1 billion people without access to electricity. So don't even get me started on sort of the shame in that. But here's a situation where there's now access being provided, but the access is hampered by the fact that the electricity is expensive. Now, it's still a benefit because before having no electricity, you prefer to have some because you can charge your phone, et cetera. You can have light at night. So the opportunity here is that in those first 3, 5, 6 years, there's a lot of excess electricity. And so the idea that we had, and Dan and Kevin were instrumental in this, is, well, let's send some Bitcoin miners over to Africa. So we have a couple of partners on the ground, and they're using the excess electricity that exists right at these very first few years to mine Bitcoin.
Huh.
Now, what's happening in that equation is it's not taking anything away from the community, so it's not costing them anything. What it is it's providing incremental revenue to the mini grid operator without any additional cost to them. So here we're mining Bitcoin in Cameroon and Nigeria. The mini grid operator now is they're making additional revenue, so they're able to lower the cost to the rest of the community. And what's neat though is because we're using the Lightning Network, we have an opportunity to pay for that electricity as I sit, here in the United States. So instant payments, paying for mining happening halfway across the world. And so, the rewards of course flow back this way, but that's like, you can think of like, how can this, so why we're doing this is not because, so at Synota, we're not Bitcoin miners. We're doing this to demonstrate what's possible when we open up the energy economy globally and we open up energy markets globally. Because again, going back to my belief in markets, they're not global today because you don't transact energy across borders because of all the cross-border fees. Well, now that can go away.
The really cool thing about that to me is that it's not only just not sort of taken away from the local people that are going to use that energy, it's actually making it cheaper for them.
Mm-hmm. Yeah.
And those grid operators could presumably charge the Bitcoin miners slightly more and almost give away free energy to those people that are local.
Yeah, it completely changes the economics. And one of the really neat things is, our modeling shows that the actual optimal setup is putting more solar, more energy infrastructure on the ground. So you can take sort of the view today, which is let's build the mini grid for the first 5 years. We can always expand it later. Well, now it's like, no, let's build for 10 years. And so let's actually put more investment in. And it doesn't even just start with, it's not just about Bitcoin mining, it's about productive uses of energy and energy infrastructure. So we're using it as Bitcoin mining as an example, but really it's now somebody in Europe or United States can make a direct investment in energy infrastructure and then have the assurance that they're going to get paid because it's all coming from the Lightning Network. So you're just opening this up to where now you're not constrained in where you invest in energy infrastructure.
So what are the downsides here? What are the bits you don't know about? What are the risks? Like this just seems too good to be true.
Well,
It's perfect, Pete. Shut the fuck up.
It's perfect, Pete. Shut the fuck up.
Yeah. Give us your money. We're off we go.
No, I mean, I honestly, I think the way that we're thinking about, there's of course going to be a lot of things that we're going to have to learn. There's going to be a lot of new things, but that's why we're building in a very open way.
Yeah.
Because we want people to help us see what we don't see. We want people we want the Bitcoin community at large to help contribute to what we're doing.
Yeah.
So sure, there's going to be downsides, but as a community, we can help solve this. We don't think Synota is going to be the one to bring the whole energy economy onto the Lightning Network. Like, we don't have some secret sauce. We have 125 years of energy experience that we're leveraging.
Yeah.
And we've got some great talent on the Lightning development side, but it's going to take a whole community to do this. And so I think whatever the challenges are that we're going to face, we know we have the whole community behind us. And that's what's really cool.
All right. And if people want to find out more, where do they go?
Okay. So synota.io, synota.io.
Right. And how do we see it in action? Is there like any kind of demo we can see?
Yeah. So we're going to be, the stuff that we're doing in Africa, we're going to be talking about more towards the end of the year. So we'll have things there that we can spend. And then early into next year is when we're going to really be kind of ramp up our commercialization in terms of bringing more people into the fold, making the product available in a more commercial way. So I think it's through that process that people will get to see it. Obviously, I'm an open book. Anybody can come talk to me whenever about this. But I think I just get really excited about, we're going to have the use cases on full display very soon.
All right, man. Well, listen, I'm glad we did this. I know it was like a rush at the end of a conference.
Yeah, we got it in.
But I'm glad we did it. I want to find out more about it. So look, stay in touch. We'll put some stuff in the show notes. And yeah, good luck with it. Sounds amazing.
Thank you very much, Peter.